The oil market continues its rollercoaster ride, yet the data on the US crude reserves helped oil to avoid a deeper fall. Worries of a looming global recession are weighing on crude prices as a global economic downturn means lower energy consumption. Oil traders were discouraged by the economic data showing that global industrial production has contracted and that manufacturing activity in the United States has dropped to its lowest level since the start of the pandemic in May 2020. Besides, the coronavirus situation in China and other parts of the world worsens the economic outlook. Saudi Arabia's largest oil supplier, Saudi Aramco, has already slashed oil prices for deliveries to Asia and Europe, which is a clear sign of a weakening energy demand. On the supply side, OPEC oil production increased in December thanks to resumed supplies from Nigeria. Naturally, oil prices are going down as demand is falling and supply is increasing. However, the report on crude inventories in the United States shifted the focus toward a possible shortage of fuel. A winter storm that swept across the United States a week ago caused a drop in the U.S. oil reserves. As a result, Brent crude consolidated near the level of $79 per barrel. This might be the right moment to buy the asset at a good price. However, given the overall fundamental background, it's better to stay out of the oil market for now. Gold has also moved downwards. The yellow metal retreated under the pressure from a stronger US dollar, which gained ground ahead of the non-farm payrolls report expected today. The preliminary estimates signal that the US labor market may again be overheated, thus encouraging the Fed to pursue its aggressive monetary policy. At the time, rising gold was consolidating near the level of $1,840 per 3 ounce. If the US employment data turns out to be stronger than expected, gold may return to the key level of $1,820 or even $1,800. In the meantime, the Russian ruble remains stable. The dollar-ruble pair is still trading in the range between 70 and 72 rubles per dollar. Surprisingly, the ruble is holding steady, even though the US dollar has strengthened across the board. Apparently, the market is waiting for Russian investors to come back from holidays. Today, they are celebrating Orthodox Christmas. Congratulations from our team. On Monday, exporters to Russia will resume sales of foreign currency, which is a supporting factor for the ruble. So the pay is likely to return to the level of 68 rubles per dollar or even lower. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.